Morning, everyone, and welcome back to Morning Markets at the end of what has been a fascinating week in asset markets. Cast our mind back to this time last week. We were still contemplating what would be the result of the US presidential election. We've had that confirmed over the course of the weekend. And then we moved into Monday and we had Pfizer's vaccine news, which sent asset markets in very different directions. A very strong and positive reaction within equity markets, in particular within the value areas of the equity market, caused sovereign bonds to sell off at that initial point and over the first couple of days of the week. As we've moved through the week and as we've been discussing, we've started to see slightly different reactions and maybe a reappraisal of the current situation by markets. And by that I mean the ongoing rising infection rates in COVID-19 and some of the measures that are being taken across developed markets, particularly Europe and the US, to restrict movements. We've seen France extend their period of restrictions a further week. We've seen restrictions being introduced in New York and also now in Chicago in the US. So that, I think, has brought some of that positive sentiment out of the market and people reappraised on the near term and those issues that are still prevalent and need to be addressed. So that saw us yesterday. We saw equity markets come off slightly. We saw the Euro Stoxx 600 down about 90 basis points, 1% on the day. A similar picture in the US where the S&P was down 1%, Nasdaq down slightly less than that. So again, just speaking to a little bit of that rotation that we saw at the beginning of the week, moving back towards some of the technology names with that relative outperformance coming through there. The other side of that equity market weakness has been the bond market, where yields have continued to move in. So at the beginning of the week, they stepped out quite materially on the vaccine news, and we've seen that come back over the course of the week. So if we look at where the US 10-year was, for example, was yielding about 98 basis points at its peak. That's come back into 87 basis points over the course of the past 2 days. A similar move has been seen like that in other sovereign bond markets. If we look at UK gilts, German bunds, etc., we've seen a similar move there. Currencies then, we've seen a little bit of dollar strength come back in from the weakness at the beginning of the week, but really not too significant within currency markets there when the dollar and the trade weighted dollar. Within that, we have seen emerging market FX move more considerably, and then within some of the safer haven currencies as well, Japanese yen and Swiss franc over the course of the week. I think yesterday sentiment in and of itself was probably impacted by the ECB conference, by the fact that we had Christine Lagarde, we had Andrew Bailey and Jerome Powell all speaking at that, all being interviewed as part of one panel. And it was quite interesting to just see and listen to their responses to some of the questions that they were receiving, very much acknowledging the great efforts that the pharmaceutical companies have made in moving towards the vaccine and the potential that does bring us to see a way through COVID-19 over the coming number of months. The coming number of months, I think, is the crucial statement, because they were each highlighting the near-term issues that the economy and they as central bankers needed to grapple with. And that, I think, did cause sentiment to be reappraised slightly yesterday. The other thing that was clear from their comments was that they still want to see and need further fiscal support, and I think we can see that as being evidenced in what is happening in the EU this week with the budget coming through, the potential that releases the coronavirus support programs through the loans, and also the additional measures that can put in place. We've seen what's happening in the UK, extension of furlough, etc. More challenging, I suppose, at this point is just that similar dynamic in the US, given the political situation that we have there. It's probably unlikely that we see further fiscal support coming through ahead of January and President-elect Joe Biden being confirmed as president. Once that is confirmed, I think we would then see a move to have some form of stimulus come through or support program come through from the US. That's important because we continue to see economic numbers in the US improving, and by that I mean we had the employment numbers yesterday, so that incremental improvement continues with initial claims at lower numbers and also continuing claims continuing to come down, so continuing claims running at some 6.8 million at this point in the US. One of the key aspects there that needs to be considered and why the support programs are important is the ongoing number of people that are coming out of the traditional unemployment support and moving into some of the special programs that were put in place to deal with COVID-19. Those roll off at the end of the year, and that's why it's important, and I think why Jerome Powell continues to call for that. Many thanks for joining us over the course of this week. Please look out for the podcast from the team at True Potential later today, and do subscribe to our YouTube channel. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.